Hello everyone, my name is Neeraj and now onwards I will be your accounting buddy. You can call me NB. The objective of this channel, Accounting Buddy, is to make accounting simple for everyone. Simple to understand and simple to apply accounting in your daily, personal and professional life. In part 1 of chapter 1, we have already covered the meaning of accounting, characteristics of accounting, and accounting process. Now, in part 2 of chapter 1, we are going to cover branches of accounting, bookkeeping and accounting, and their difference, objectives of accounting, functions of accounting, and advantages of accounting. Before we start today's lesson, let us have a quick recap of our learnings of part 1 of chapter 1, Introduction to Accounting. We know that every business is established with an objective of making profit. Business has to enter into numerous business transactions in order to run the business. Business transactions could be related to sales transactions, purchase transactions, various expense transactions, transactions related to receipts and payments, to name a few. At the end of each accounting period, every business needs to find out how much profit is earned or loss incurred. In order to meet this objective and many more, financial accounting comes into picture. Complete financial accounting process comprises of 7 steps as mentioned on your screens. Identifying financial transactions, measuring the identified financial transactions. Third is recording the financial transactions. Fourth, classifying the financial transactions. Fifth, summarizing them. Sixth, analyzing and interpreting financial transactions. And seventh is communicating them to the stakeholders for making decisions. If we sum up the financial accounting process, first, financial transactions or the events are identified, then they are recorded in the book of original entry, that is the journal. Then these transactions are classified and posted into the ledger, and after that they are summarized into trial balance, profit and loss account, balance sheet and cash flow. And then comes the step of analysis and interpretation. And finally, they are communicated to the stakeholders for decision making. Please revisit part 1 of chapter 1 video for revision. In the process, we also learned key accounting terms, business and types of businesses, then business transactions and events, profit and loss, accounting years, stakeholders, bookkeeping and financial statements. We will discuss these terms and many more accounting terms in our chapter 2 accounting terms in detail. This question is often asked whether accounting is an art or a science. It is actually both. Accounting is a mean to achieve the objective of systematic recording, classifying, and summarizing financial business transactions. That is why accounting is an art. And accounting is a science as well. It is a science as it is an organized knowledge of business accounting which is followed universally. There are 3 branches of accounting: financial accounting, cost accounting, and management accounting. Financial accounting records business financial transactions and events, summarizes them, and interprets them before communicating to the stakeholders. Financial accounts is confined to the preparation of financial statements, that is profit and loss account, balance sheet, and cash flow. I hope you remember that in part 1 of chapter 1 video, we have learned in detail about the financial accounting. Now, as the name indicates, cost accounting deals with the accounting of the products, processes, and business operations. It is a specialized branch of accounting which deals with the various aspects of costing and costing techniques. Management accounting facilitates management with the information to take business decisions. It uses both historical financial information and future estimates. For future estimates, logical assumptions are considered. Management accounts are not required to be maintained by the law. However, every business produces some form of management accounts. It is important at this stage to know the basic fundamental difference between financial accounts and management accounts. Financial accounts are prepared annually, while the management accounts are prepared at a frequency decided by the management. Financial accounts are compulsory under the law, while the management accounts are optional. Financial accounts are related to transactions and events of the past, while management accounts consider both historic data and future estimates. Financial accounts formats are regulated, while the management account format varies from business to business. Financial account presents summarized form of financial information, while the management accounts provides detailed information required for decision making. Let us now understand how bookkeeping and accounting are related and what are the basic differences between the two. Before we look at point by point difference between the two, let us understand some basic relationship between them. If you recall, we discussed on slide number 4 that there are two elements of accounting: bookkeeping, which identifies, measures, records, and classify business financial transactions, and second, the financial statements, that is profit and loss account, balance sheet, cash flow, which represents accounting information in a summarized form. Therefore, we can conclude that bookkeeping is an integral part of accounting. Now let us discuss point by point difference between the two. First point of difference is the scope, which is self-explanatory as displayed on your screens. Second, bookkeeping is the first step in the accounting process, while accounting is the second stage and it uses information from bookkeeping to prepare financial information. Third, basic objective of bookkeeping is the systematic recording of all the business financial transactions, while accounting ascertains the profit earned or loss incurred on the basis of financial business records. Fourth, end result of bookkeeping is to provide input for accounting, while the end result of accounting is financial statements for decision making. Fifth, bookkeeper and the accountant are the title of the persons who manages bookkeeping and accounting respectively. Sixth, bookkeeping is comparatively routine work, while accounting work requires a knowledge of accounting practices and rules. 7. Bookkeeping process is common across all the businesses, while the financial analysis may vary from business to business. The objective of accounting have been discussed in the previous slides at several places. In this slide, we have summarized the accounting objectives at one place for better understanding. First and the most important objective of accounting is to maintain systematic records of business financial transactions and events. I sincerely hope you remember the meaning of the terms systematic records, business transactions, and business events. Every business is established with an objective to make money. This objective is met through accounting, which ascertains the profit earned or the loss incurred during the accounting period. I sincerely hope again that you guys remember the meaning of the word profit or loss and the accounting period. Another important objective of accounting is to prepare balance sheet, which shows the financial position or the financial health of a business. Providing relevant financial information to management in a timely manner is an important objective of accounting. This helps management to make correct business decisions. Accounting provides financial information to internal and external users. Accounting keeps proper and up-to-date records of the business assets and thus helps to protect the business assets. Systematic and timely recording of financial transactions with accounting controls ensures the prevention and detection of financial errors and frauds. We have listed down 5 major functions of accounting with brief explanation. They are: first, maintaining systematic records; second, preparation of financial statements; third, statutory compliance; One of the major functions of accounting is to meet the legal requirements and always be an acceptable and reliable source of submitting information related to GST, VAT, income tax, or any other information required by the government departments. Fourth, communication of financial information to the stakeholders. And fifth, financial update to the management. Let us now discuss the advantages of maintaining accounts. First, accounting ensures the systematic recording of financial transactions as per accounting rules and ensures the financial information is always available for analysis and reporting. Second, it helps in business decision making. Third, it also supports business to evaluate and compare business performance. Fourth, accounting records ensures compliance of tax and company laws. Fifth, by tracking and providing information for each head of cost, it helps business to optimize various business costs. Sixth, investors and shareholders' trust is maintained with accurate financial reporting. Advantage number 7. Accounting rules and built-in controls helps business to detect and prevent errors and frauds. Number 8. For future planning, accounting provides the historical data. It helps setting future business plans. Number 9. For filing VAT, GST, income tax returns, and the computation of tax liability, accurate accounting records reduces the risk of errors. And number 10, accurate and reliable accounting helps business to identify growth opportunities. Now let us try and answer few questions related to our learnings in part 2 of chapter 1. Question number 1, name 3 branches of accounting. Answer is financial accounting, cost accounting and management accounting. Question number 2, financial accounting only deals with historical information. True or false? This statement is absolutely true. Financial accounting only records the transactions and the events related to the business which have already happened. Question number 3, management accounts are required to be maintained by law. This statement is false. Management accounts are optional, but nowadays most of the businesses maintain management accounts for one reason or the other. Question number 4, bookkeeping is not a part of accounting. This statement is absolutely false. Bookkeeping is an integral part of accounting. In fact, accounting starts where the business bookkeeping ends. Question number 5, accounting information should be reliable. True or false? This statement is absolutely true. Most of the business decisions are based on accounting information. Plus, the accounting information is the basis for filing the VAT return, income tax returns, and providing relevant information to the government departments. Question number 6, which type of accounting calculates the profit or loss of a business? The answer is financial accounting. Question number 7, mention 2 objectives of accounting. Answer is ascertaining profit or loss of a business, and second, systematic recording of business financial transactions. Question number 8, mention 2 advantages of accounting. 2 advantages of accounting are accounts provides financial information and the position of the business, and it also helps in taking the business decisions. Please note down the topic, date and the time for our next post. If you like the content, please do like and subscribe to our channel Accounting Buddy.